Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, this is the weekend, and on the weekend, we like to do our weekend webinars. This weekend is August 23rd, 2008, and the weekend webinar, I think we're going to do a weekend webinar, and it's going to be about the currencies. Traders, the purpose of these weekend webinars is always to try to show you a broader picture of the whole market as one big marketplace, even though you have currencies and grains and meats and metals and a whole lot of sectors out there. Of course, you have your stocks. We like to show you larger pictures of what maybe an entire sector is doing, and that sector moving either up or down will usually be a gauge on what the other sectors can do. With that in mind, I'm going to show you some currency charts here, traders. You know, I sit and I study on these weekends and I try to find something that strikes me, something I know that we've studied all week and all month, but we haven't really studied this particular thing. That's what today's video is about. You students out there, my Omniacs, get ready because this one's pretty good. I think when you're done looking at these charts, you will realize that it is likely that there is a fundamental shift still beginning to work its way through the economy, and through the currency charts, I think we can see that. Now, what that shift will mean, of course, there's only one way to find out, and that's when the future gets here. However, I think we can get direction on some charts and some markets so that as this fundamental turn takes place and the markets begin to do something possibly different than they're doing now, you will have an idea what to do with it. With no further ado, traders, let me take you into some currency charts here. Okay, traders, the first chart you are looking at here is a weekly British pound September weekly bar. The weekly, which means each one of these green lines represents a whole week's worth of trading. Traders, another one of the Omni proprietary moving averages we like to use at the Omni Trading Academy is before your eyes. It's this red average right here. You'll notice that the British pound was the first of the currencies I'm about to show you that started to get below our Omni proprietary average. This is not the same proprietary moving average we've been showing you in the past. That's in the color purple that we show you. This one is red. It's a completely different average. And of course, we'd be more than happy to share this with you at the Omni Trading Academy. But point being, let me show you what this whole picture is here. Okay, so as you can see, it gets above and stays above for quite some time. Well, we get below, we test a little bit, we mark a little time, and then a break comes, takes us down below the 200 bar moving average. Now that's the British pound. So I noticed that and I said, well, let's go take a look around the block here and see what's going on in the rest of the world. British pound opened up my eyes for sure when it got below a few weeks ago. Then the big break, you know, I've been watching that. I've been talking about dollars getting strong for the last few weeks. And obviously, if British pounds are going down, the likelihood is US dollars are getting stronger. With that picture in mind, let's go look at another chart. British pound done weekly. Let's go to the next one. Okay, traders, the next chart we are looking at here is the New Zealand dollar. I figured I'll check the planet, right? So I went to New Zealand and I said, what's going on with my average in the New Zealand dollar? And look, it was the second of the currencies I noticed that broke. And look what happened since it broke hard, got down below the 200 bar moving average, and now is trading right around the 200 bar moving average. But look at how it stays above our average, and when it does get below, it happens to stay below for quite some time. But you don't get a lot of crossing through the average. The market doesn't usually go through it. It gets above it and stays above, or it gets below and stays below. Again, you are looking at a weekly chart of the New Zealand dollar. So that's chart 2, right? We saw the British pound, now we see the New Zealand. And then I started to really be interested in this, so I went to look at a few more charts. And let me show you what I found. Traders, the third chart that I found was the Australian dollar weekly bar. That was the third one. It's got the third longest amount of distance below, or time spent below, the Omni proprietary. As you can see, it doesn't usually stay below it. And when it does, it's big and it lasts for quite some time. It's usually above that average, so when it gets below, it opens up your eyes. Now, if you'll notice, the other charts were beginning to race towards the 200 bar moving average, and probably the Australian dollar will as well. Point being, look at how we are now below the Omni proprietary. Again, traders, this is not the same Omni proprietary I've been showing you. This is another one of the tricks that we like to use. We got up our sleeves at the Omni Trading Academy, and it's a very good average, and it works well on the weekly. So Australian dollar following in suit with the other currencies that have finally broken the Omni proprietary and are now heading towards the 200. This is on a weekly, traders. I showed you this on a daily 8, 10, 12 days ago, and that daily produced a big drop to the 200 bar moving average. Now the weeklies are showing most likely a drop towards the 200 week moving average. That's big. Okay, so now we see Australian following in suit. Let's go look at another chart. Okay, traders, now, of course, checking more of the world's currencies, I go to the Canadian dollar. Canadian dollar, another one of the currencies that usually marks time above this average, and when it gets below, you get a nice fat dip, if not longer. Well, the Canadian dollar has dropped below the proprietary and is heading right towards the 200 bar moving average. So now, in New Zealand, in Australia, in Britain, in Canada, you can see that these currencies are dropping below averages that they're not normally below. That, of course, would make dollar index, the US dollar, begin to move higher. That would be a fundamental shift in the way these markets have been trading. Traders, with the exception of the last 8, 10, 12 days, the dollar has been getting canned for months and months on end. It's been getting hit to the downside. All these other currencies have been rallying for months and months. I mean, look at these rallies. Well, that seems to be changing. If that pattern is changing, absolutely there is a fundamental shift taking place. You cannot have the world's currencies shifting gears without that having repercussions throughout the entire world's markets. And if you look at the scenario of where we've been, S&Ps, the world stock market's going down, and our dollar index going down, if all of that is shifting, maybe, just maybe, it'll make commodities weaker, dollar stronger, and maybe at some point that'll start dragging up our stock market. That would be a wonderful shift, a fundamental shift. Let's see if we get that. Again, traders, we've looked at New Zealand, Canadian, we've looked at British. Let's go now look at a few more charts here. Okay, traders, the next chart on the block is the Japanese yen weekly bar, and now this guy has decided to join the race, get below the Omni proprietary, and head towards the 200. Doesn't have all that far to go. As you can see, it's already had a big drop. However, it's now getting itself involved in this average, and so many commodities, or I should say so many currencies, are doing that right now, hovering around that average. It has to mean something, traders. It always does. Like in the videos I've been presenting to you recently, showing you how lots of markets have been converging around a certain average, and that made a big, big move. Well, that's what's happening right now on the weekly in a lot of currencies. I've looked at a real lot of them. I'm only going to show you 8 or 10 of them. They're all over the globe, so take a look for yourselves. So now the yen has joined in the fun. Let's look at another chart. Okay, traders, this is a big one now, and look at this. Euro currency decided, hey, wait a minute, if you're all going to jump off the bridge, I'm coming with you. And here it is. You know, we usually stay above this average, and now we are below it. And what I'm trying to point out is each chart I'm showing you is a little bit further below that average, heading towards this one, the 200. Well, this just got below it, which means it probably has a lot of chance, or a very high percentage chance, of moving down at least to the 200 bar moving average. These are weekly charts I'm showing you, traders. That is the forest. Forget about trees. The weekly is showing you where these markets are going. We spent a lot of time above that average, and now it looks like some time below it is coming our way. If it was just in the euro currency, you'd have to question it. Look at how many different currencies I've shown this to you in already. Let's go look at more. The next chart I'm about to show you is the September Swiss franc weekly bar chart, and it too has decided I'm going below that average, and I will likely head towards the 200 bar average now. Traders, look at how long this weekly has been above this average. For it to get below And again, it just started to get below, and all the other ones I've shown you that have been below for a couple of days or a week, or I should say for a couple of weeks or a month, have dropped dramatically. So why wouldn't the rest of these, the euro currencies, with the exception of British pound, are just getting warmed up on the downside? British pound's already been cracked pretty good. So in the progression I've just shown you these charts, I'm showing you them at almost in a calendar session. In other words, this one just got below the Omni Proprietary. Every chart before it has been below it for at least a week or two more. So I started showing you the ones that got below it and broke hard, and now I'm showing you the ones that have just gotten below it. And what do you think that means? What do you guys back there think that means?
That means they're following each other.
That means that these are probably going to break just as hard, because absolutely they're following one another. Let's go look at another chart here and see if we can find another world currency doing a dance around that average. Okay, traders, my point is going to be driven home here. The Czech Koruna. Are you kidding me? I mean, how far do I have to look? How many of these wacky currencies that are out there am I going to have to show you? Even the Czech Koruna is about to break that average. I mean, come on, it's happening across this globe. Now, again, what that should mean is dollar index up, right? Let's go look at that dollar index and see what that looks like. Okay, traders, you are now looking at the dollar index, US dollar index weekly bar chart. And as you can see, look at this. Finally, after staying below for so long, dollar index sticks its head up and is now above the Omni Proprietary, heading towards the 200. Now, I just showed you a series of charts that were all above the Omni Proprietary, getting through it and heading towards the 200 this way. The opposite of that would be dollars. Dollars are now above the Omni Proprietary and heading towards the 200 this way. Traders, this does not happen by accident. That, I kid you not, is a fundamental shift. As small as it may be now, that is a fundamental shift beginning to take place in the world's economies. Overall, this movement, if it continues in this fashion, dollar up, currencies down, then the commodities will become more bearish, and ultimately it should be bullish for our stock market. Now, you know I am not looking for the stock market to run away tomorrow on the upside. It would have to do a lot of proving to turn bullish. However, this scenario I've just painted for you would certainly not hurt our markets at all if it continues. Do your own homework, traders. Pull your own currency charts. I've shown you currencies around the world. There are probably 20 more, 30 more that you can look at that are in this same spot right now. Do your homework, traders. Make your assessments as well and tell me what you think. So, you've seen the charts, traders. I don't make this stuff up, traders. I read the analysis the way it presents itself. I don't bend my indicators. I don't curve fit anything. I use them raw, the way they come out of the box, and I read them to you. And you know me, I like to look at the larger picture and see what everything out there is doing, because then it makes me more secure and more sure in my shorter term calls. If I know we're beginning an ascend in the dollar and a descend in foreign currencies, well then at least if I'm trading currencies, I know I got to be buying dips in dollars and selling rallies in currencies. I also know what it should mean to other markets, gold, metals, meats, so it gives me a really good gauge on the other stuff that I would like to trade when I look at the larger picture. And that's what we love to teach at the Omni Trading Academy, traders. If you like the analysis and you'd like to learn more about it, or you want to know what our Omni Proprietary moving averages are and how they work, come on down to www.livewithoscar.com. Get yourselves a free membership and jump on in the chat rooms and let us show you how to get the analysis right. Traders, markets are always right. The analysis is right more often than not. If you do analysis correctly, you should be able to gauge which direction markets are going to go more often than not. And as commodity traders, you can't be right 100% of the time, but if you're right more often than not, it's going to lead to a smile on your face. So come on down to the Omni Trading Academy and let us teach you how to get that smile put on your face. All right, traders. We have the trading contest. It's been beta tested. It's working well. Let's go, baby. Yay! Traders, we have a virtual trading contest. You're going to get $10,000 virtual cash in a simulator. We would like you to show us your prowess, show us what you have, show us how good you are. Come join our trading contest. Earn while you learn, traders, because we're giving out prizes. If you win the contest, they're weekly contests, 5 days at a time. If you win, there will be prizes. You will be benefited for your trading. So make sure you come on down to the site and join in our contests. Traders, with the trading contest, there is a blog. One of the only things we require from you is if you join our contest, you agree to write in your blog once a day quick thoughts about what you did, why you did it. The whole purpose of this contest is to teach others how to trade, to show them if you join the contest in January and you just met us, these were your results. Now you've been in our school for a while. If you join it again, take a look at your results, and I think you will see an improvement because of the analysis we teach you. With that in mind, use your blogs if you choose to become a contestant. Make sure that you use your blogs and teach the other members out there about trading. That's what this school is all about, so help us out, traders. You can join if you're silver or higher. Silver members or higher at our site. Silver members and gold members are welcome to join this contest. Traders, come on, show us what you got, all right? You're all great traders out there, right? Well, if you are, come show me what you got. We'd love to help you out and teach you how to trade, right? Can't wait to break that out. Traders, that's already out on our homepage. Is that where it is, guys? It's on the homepage?
Yeah, we'll throw up something on the homepage for that.
You will have a link to the contest right there. You can sign up, follow the instructions to signing up, and make sure you sign up this week so you can be in the contest for next week. All right, traders, I hope you like these videos. I hope you see how we help traders to view these markets. It is not about whether you follow my calls to the T, whether I even make them right or wrong. It's about the homework we teach you and that you can see works. Forget about what I think. You can see the homework. The analysis, what I mean by homework, really does work, traders. We have stacks and stacks of testimonials. I'm talking thousands of them that you can read through. So many traders around this world have learned so much at our Omni Trading Academy. And again, it teaches you how to fish for a living instead of eat for a day. It will help you feed your family if you get it right, if you study the analysis hard enough, and you apply it properly. Can you lose? Absolutely. In trading commodities, traders, don't let anybody kid you. You can lose more than you ever thought you were putting up because commodities can drop lower than what's in your account and keep dropping in deficit until you jump out or have to meet your margin calls. So do not kid yourself. This is not a win-win situation. However, you traders out there know if you get commodities trading right, it is the brass ring. It is the best way to trade out there that I've ever seen. And the best traders in the world are commodities traders. So it's not easy, but it absolutely does and can work for you. So make sure you give it a try, traders. Give us a call anytime, 702-629-4755. And keep shooting out those emails to me at oscar@futuresanalysts.com. All right, traders, don't trade alone. I always say this to you. I'm telling you, you can't imagine how many letters we get from people that say, Oscar, it's amazing now that I've found this crowd with you at the helm there, helping keep everyone calm and guiding us through the markets. More than that, the teaching that you give all day long, and we do all day and all night, it's all about tips and education, and it's allowing you to look over the shoulder of a 26-year veteran analyst and trader and have him just share with you the secrets that he's learned. That's what I do, traders. That's what this site does for you. So come on down and you'll see that for yourselves. Guys, are we done?
I think you got it.
We're out of here. All right, traders, I'm out of here. Weekend webinar is over. I am flying out of town tonight. I will be broadcasting to you from New York City on Sunday night and Monday morning. Then I'm back in Vegas for Monday night. So I'll see you, I'll be there. You guys will find me, but probably a little intermittent Monday afternoon as I got some appointments in Manhattan. But I will certainly be there, and I can't wait to see you guys Monday night when I get home. All right, traders, that's about it. I'm out of here. Don't forget to say this to yourselves every morning, afternoon, and evening, and you know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.